Hello, I'm Peter Towers, Managing Director of ESS Small Business. Welcome to Empowering SMEs. I hope that you are going well and surviving in the COVID-19 coronavirus problem times. Today I want to talk to you about utilising predictive accounting to avoid the lockdown blues. I was joined in a special webinar this week by Paul Barnaby, a predictive accounting consultant and a very experienced chartered accountant, and also the Australasian and Asian representative for PlanGuru. Paul Barnaby gave an overview of using predictive accounting software developed by PlanGuru to visualize the financial future of a business or charity or not-for-profit. Paul indicated it's never been more important to budget than what it is today because of the problems we have all around us. He indicated that the PlaneGurus software allows budgets and cash flow forecasts to be prepared in under 60 minutes, admittedly by someone that has got some experience in utilizing the software. He said that budgets shouldn't just be prepared based on last year's figure plus a percentage, but you should be drilling down as to what is actually happening in your business and going back and starting from the individual units. How many meals do you think you are going to sell in a particular session? What is the average price going to be? What is the average gross profit percentage going to be? And build up from there. Don't just take last year's figures, which would be very dangerous in the current environment, wouldn't it? But that's basically the same year after year. You should always go back to the basics, start at the bottom and work the way up, and that is what the PlanGurus software allows you to do. The three-way budgeting process developed by PlanGuru incorporates budgets, cash flow forecasts, and predicted balance sheets, because the balance sheets really say in accounting terms, does this whole process balance? Because you might be doing forecasts over, say, 3-year period. You might be looking to get one of the special coronavirus SME Guarantee Loans of up to $250,000, which only runs for 3 years. You have to be able to repay the debt at the end of that time. And Paul Barnaby then moved on to do a case study utilizing PlaneGurus software, which we all found very interesting. So you can view Paul Barnaby's presentation and the case study that he presented utilizing PlaneGurus software on our link to the webinar recording, which is detailed in the email that you received alerting you to this video. I then made a presentation looking at avoiding the lockdown blues. I know it's been very difficult. I was reading somewhere the other day that nearly half the workforce has been working from home. And there's now debates in some organizations as to whether everyone returns to the office or the factory at the conclusion of this. It's probably going to be difficult with factory workers. They're probably going to be at the production site, but a lot of office workers might be able to work from home if the business is happy and indeed if they're happy. Some people might be having some blues though, in a bit of isolation at home, away from their colleagues, away from the opportunity to have a discussion. Most businesses though are in a different position to what you were in January. In January, I wasn't thinking anything bad about a virus hitting Australia. I was starting to read some stories about what had happened in China and the unfortunate doctor who apparently identified that a new virus had arrived and then was victimized and ended up dying from the virus. That was about all I'd read And I dare say that is what most Australians had read. And then suddenly it becomes a worldwide problem. I think you as business operators should be thinking very seriously about the services you've received from your accountant or your accounting firm over the last 6 to 8 weeks. You've undoubtedly asked them to do some additional and different work. They've been performing a broader role than what they normally work for you. They've had to read the various announcements, some of which contradicted one another, that were issued by the Australian government and or the taxation office, and then develop systems whereby they could alert you as their clients as to what the changes were about, and then advise you as to your eligibility for programs like JobKeeper, and advise you of the cash flow incentive payments that the tax office was automatically going to make, and what your eligibility criteria might be for those. But to also alert you about the commercial rental benefits that you might be able to receive as long as you qualify for JobKeeper, for a rental deferral or a rental waiver. And some of you would have benefited by the advice that if you had apprentices and or trainees, and as long as you had less than 20 employees, you would be able to claim an apprentice or trainee subsidy of up to $21,000 maximum based on 50% of their salary. So your accountants have been performing a broader range of services. I think you should be sitting down and talking to your accountant and saying you like this idea, you like them being involved in your business, and ask them to perform a broader range of services, which most people refer to as a virtual chief financial officer service, whereby they become more involved with your team to assist you to add value to your business. It's worth the discussion. It's worth doing it for 6 months to see how it works for your business, isn't it? Because there's still a lot of things to be done to avoid the lockdown blues. One of the key tasks that, if you haven't already done it, I think should be some accurate financial forecasts, budgets and cash flow forecasts for the period now up to the end of September. And if you're receiving JobKeeper payments, life's going on fairly steady, I imagine. But that can all change at the 30th of September, because this support that the government's giving in both the JobKeeper payments and the cash flow payments, which is basically paying a fair bit, if not all, of your PAYG tax deductions, will cease. And what's that going to cause within your business? My recommendation is you ask your accountant to prepare budgets and cash flow forecasts, first of all to the 30th of September, and then from 1 October 2020 to 31 December 2021. Because I think it's going to be very difficult to make arrangements with banks and or to get government grants after the 30th of September, because banks are going to be worried about that they have exhausted the supply of money that they have for businesses. And if they haven't fully allocated by loans all of the money that the Reserve Bank and the Australian government made available to them to lend as coronavirus SME Guarantee Loans by the 30th of September, they have to return the balance out of $105 billion to the Reserve Bank, because that money was made available to the banks on the strict understanding that it was short-term finance for 3 years, loans maximum of $250,000 for working capital purposes to help businesses survive this period. And if they didn't need it, it's to go back to the Reserve Bank. So if your projections say that you might need some money around Christmas this year, I think you should be applying for it now and trying to get one of the coronavirus SME Guarantee Loans. Your forecast, though, might show that you really want to source more than $250,000. If so, you will need to have a very strong case to take to your bank. Whichever type of loan you're trying to get, you're going to need a business plan, budgets, cash flow forecasts, your financial accounts and tax return for 2018-19, your interim financial accounts to at least the 31 March 2020, so you can sit down and talk to your bank. Now that might prove to be a problem area for you. If so, there is an alternative, and that is to look at trying to raise some capital. You have to be a company to raise capital. You might already be a company. If you're not a company, you can be converted to a company. Just talk to your accountant about that, or send me an email, peter@essbiztools.com.au. You were able to raise capital utilizing Section 708 of the Corporations Act, up to $2 million in 12 months from a maximum of 20 investors. Or a far easier process is to utilize crowdsourced funding equity raising, because you can raise up to $5 million in a 12-month period. You don't have to raise that much, though. The average capital raising so far is about $800,000 for crowdsourced funding equity raising in Australia. And that money can be raised from the public. For retail investors, there's a maximum investment of $10,000. So you might end up with 1,000 shareholders, but they are people who are interested in your story and being part of your journey in your business. You're going to need a vision. You're going to need a leadership team that wants to achieve something. But it is possible to raise capital to fund your business. And I'm sharing all this with you today because I think you need to start thinking about it now. It's no use waiting to the 4th week of September and saying, gee, we might have to do something about this, because unfortunately, it's going to be too late. And the other big problem you've got is your accountants are busy. Most of them have still got tax returns to lodge from June 2019. This last 6 to 8 weeks has caused a massive disruption within their tax lodgement programs. And sure, the tax office is probably going to extend their lodgement deadlines from the first week of June to the last week of June. But if you want to get them involved in working with you as your chief financial officer to do the types of projections that I'm talking about, I'd also be talking to them pretty soon so they know that you want them to do that. They can factor you into their programs, because all these things take time and they need to be set into a program. You can watch Paul Barnaby's presentation and my comments on how you can avoid the lockdown blues by clicking on to the link that we've shown for last week's webinar in our email that we've sent to you referring to this video. So that's in Empowering SMEs. Our next presenters on Wednesday, the 27th of May, are a lawyer and an accountant who's a little bit different, a delightful lady from the Hunter Valley in New South Wales, who ran her own accountancy firm for 18 years and now mentors and coaches accountants on improving their service offering to people like you, small businesses and medium-sized enterprises. Her name is Amanda Gascoigne, and she is joining us on Wednesday, the 27th of May at 12 noon AEST in a free webinar to give you an overview of the types of services that the accountants that she works with are able to supply. I think you'll find it very interesting. And Amanda's joined by Matthew Karakalakis, a partner in AMK Law from Adelaide and Melbourne. And Matthew is going to give you an update on a number of the legal issues because of COVID-19, coronavirus. We've got changes that have occurred, or temporary changes, I probably should have called it, in the Corporations Act. We have various other matters. Matthew will also discuss various legal concepts that can be interpreted differently, or perhaps you should have embedded in your contracts from now on, so that in the event that this type of problem occurs again in the future, that you might be better protected than what you might have been this time. So that free webinar, Wednesday the 27th of May, 12 noon AEST. We do send to every person who registers a link to the webinar recording. So if you'd like to receive the recording, please register with us and we will send that through to you. Thank you for joining us for this video. Please stay safe. If you have any questions or comments, please send me an email, peter@essbiztools.com.au. And you're most welcome to visit our website, www.esssmallbusiness.com.au, where you will be able to view an overview of the services which ESS Small Business is supplying to assist small businesses and medium-sized enterprises survive the lockdown blues and come back as stronger businesses post 30 September 2020. Have a great day. Goodbye.